Good morning. Alright, we got sound working. That's good. Let's make sure the screen is shared properly. Okay. Give me a few minutes. Let's set up and then we'll get this going in the next few minutes. Be right with you. Alright, we're back. Having a little difficulty getting this set up for some reason today. It's got a mind of its own. Let me do one thing and then we will get started. Futures are up in pre-market, just slightly, kind of drifted upward. Okay, share that. I don't get that. Alright. Alright, Let's see here. Markets are open. And we're seeing a move to the upside. Taking a look at bonds, crude, gold. Let's take a look at our side-by-side view of SPX and the ES. We're basically at a 50% retracement from this high last week to this low from yesterday. We're right in that 50% retracement area. We're going to see if we can hold that. Let's get down to this 15-minute. We got a couple levels on the 15-minute that we were looking at from yesterday. Right in here from 30 to 34, and then there's a better level up here at 39 to 42. Let's get our first 15-minute candle open. Is right there on that. Okay. And then let's wrap our pink lines around this candle. I have to adjust it once it's actually done forming. It'll finish forming at 6:45. So this candle represents the open at 6:30 to 6:45, that first 15 minutes of trading when a lot's going on. Other stocks are still opening up, still starting to trading. So we don't get a real true picture of what the market's going to do until really about 15 minutes in after 6:45. So that's why we go through this little pre-market routine or pre-trade routine. Don't need our fib levels on there. Let me see, I want to get rid of that. There we go. Okay. Alright. Let's see if we can poke our head above this. Overnight high, we just did. Get up into this area up here, we'll take a short. We do have a little demand zone down here from the overnight. Nothing spectacular, but you know, it may provide something. Okay, the S&Ps, that's what they're doing, which is not much. Let's take a look at NASDAQ real quick. NASDAQ's poking its head up. Had a nice retracement into a little demand zone here, right at 47, 43 area. And we're trying to get back above the overnight highs. Let's go down to a 15. We're right up into some congestion in here with the NQ. Can't get over the overnight high yet. go down to a 60. With the spike in volatility yesterday, we saw it hit, uh, really it popped up to about 15, yeah, almost 15 and a quarter, and it was up about 50% at its peak, and then proceeded to get slammed down, and now we're at under 11. What we do in these type of situations, part of our core strategy that we teach, is we sell premium. Going into events like this, when you see a VIX rise like this, premiums become inflated in the options market, and we go ahead and we sell premium in equity indices and individual stocks, and ETFs like the Spiders, SPY, the Qs, QQQ, SPX. Um, we really want to take advantage of that volatility expansion. As you can see, it doesn't last very long, especially with today's products that they have out there over the past couple of years, 5, 6 years. All of these reverse VIX products and ultra VIX products and ETFs and VIX futures. Traders are actually trading the VIX now, and anytime you see this type of move, you're seeing it push down pretty hard pretty quickly. And that's due to a lot of factors, including what we just talked about, those different VIX products and people having access to really trade around the volatility itself. And so, yeah, you go up from being 50% to up a handful. Um, that's the type of event we'd like to see, and we went ahead and we sold some positions in a couple of those products. So we'll take a look at those in a little bit and see if we can take those off. Let's just go through a couple of them right now. SPX products, we're up 75%, 70%, 43%, 83%, 88%, excuse me. Micron reported earnings yesterday. They basically stayed within their expected range. Nike popped up to the upside. They're up, right now they're up 8%. Wow. A couple earnings plays, ideas around these particular stocks yesterday. That's what we do during earnings. We'll take a look at what fits our criteria, and we'll put on some trades. Typically selling some premium going into these things. If we have a directional bias, we'll skew the positions in the trades to reflect that. But most of the time we're just simply selling premium at super safe levels, getting a nice 1 to 2 day trade in, 4 times a year when earnings come around. Let's take a look at the banks and see what they're doing today. They are, yeah, that's the problem. They're up in some supply. At least Bank of America is. Let's get this back $20 session. Connect this back. Oops. Green. Regular. Okay. Yeah, B of A's right up here in this 2450 area. Let's look at Goldman. Goldman just turned negative. It's fighting to change this trend up. We're trying to break out of this area down in here. Above 230 would be, I think, would signal a breakout to the upside out of this little pattern down here. S&Ps, not doing much. Crude oil is not doing much either. It's sitting up at these elevated levels and not really reacting to anything. We were drawing some lines on the charts yesterday, taking a look at possible scenarios for oil and where it can go. We think that oil can head back below $35, but we're probably going to get an initial pump back up to, let's say, 48 to 50 bucks. And so we got this little wave pattern, and it typically follows up with an extended move to the downside. We can take a measurement from this high down to this low, and basically we're going to see where we could potentially break from this low, and that would put us right in the middle of the zone at 29.30. So we expect, this is on a weekly chart, but you know, going into the end of the year, we may see oil back below $35. So that's a long-term trade idea. We're gonna have to wait and see for that to play out. We probably still have some room to the upside, so if we can join the trend, that's what we'll look to do. Take a look at gold. We were looking at the daily big picture from this high to this low. We've already hit the 61.8% retracement up at 1280 a couple times. We can't move up a little higher yet until we get really down to some real demand. And it's probably a little bit lower, maybe down at this 20 area would be an ideal situation for us to get long, to get back into this trend. Right now we are, if you take a look at these lows, we are sitting in this, on this trend line. We got to hold this if we're going to keep moving up. Otherwise, if we break this, we may see a further pullback down to the 1180 area. On a shorter term basis, the opportunities don't look that great. A couple days ago we had a nice short up in gold at the 54.55 area. We had a short yesterday, possibility, down here at 46, and that worked out if you'd taken that. But now we're just sitting here, and right above this level that we had identified as some demand. Below that, don't really like anything. So, and this is on a 240. Yeah, if we don't hold this 220 area, then I think we're going to keep going down for a little bit. In terms of supply, there's a little bit right here. The better zones are up here towards this 1290 area. Take that off. I don't know why I have the labels on. Show value, justify. Okay, that's fine. Couple areas above us, so we're low in the curve. We'd want to be buying if we're down here, and so we'd look for potential changes in price action and patterns to see if there's a possibility for us to join to get in this long. Nothing is setting up right now though. We don't see anything that we like. Alright, here we go. Taking a look at gold. S&Ps, what are they doing? Did we close the 45? Yes. Okay. So let's get our first 15 minutes set up. There we go. Let's see what we can do. Having some trouble making any type of direction. Oops. Change that, change that. Okay, and 93 was the previous close. Okay, so one of the setups that we like to look for is in the context of either an uptrend or a downtrend, we want to find the open in the previous close the prior trading day. And typically, price likes to gravitate towards these levels. Opens, closes, previous day, either closes, highs, lows. Price tends to revert back to these levels, and if we can have some confluence with uh, those particular data points and the picture that we're looking for in the charts in terms of the, the patterns or the price structure, however you want to call it, if we can get those two aligned, that's a trade setup that we look for. So in this case, we have on a bigger time frame, we have a strong day, and what's a strong day? Basically means we're above previous day close and we're above the open. And in this case, we're we're above both of those levels on the daily candle. And we go down to a smaller time frame and we highlight those levels, those data points. Oopsie. Why isn't that working? And we're going to find what that pattern looks like. And in here, we have some demand. We have some move away from this area. So this kind of looks interesting. Not the cleanest, but if we can change the time frame to get an idea of exactly where that picture is, that would help us out. And so we have this area right in here. You would just put your stop below the open. In this case, we'll put it below this distal line, and this is the opportunity to get into this trend to take it up a little bit higher. We're still pretty low down here, so we may have some room to go, and this is one spot that you can join the trend. So let's keep an eye on that. Put an alert there, just so we have that set up. This is what we're talking about right in here. Can you guys see now? How's that? We have the open, previous close, and that corresponds to this level right in here. Thanks, Lamar. Appreciate it. Can you see now? Getting a push up. Yep. Breaking out. But we're heading right up into some supply here. ES can't move up, at least yet. Just gotta be patient, sit on our hands, and we're waiting. If we have an inside day, it may be a little choppy for us here today trading. It is the last day of the quarter, whatever that means to you. Just be cognizant of that. Going into a holiday week, you may see a very boring trading day today. Could end up being a wild one like yesterday. I think we saw all the fireworks we're going to see this week yesterday. Today I think we may just drift around in a channel between overnight lows about 15 to maybe up to 35. So we have a 20-point range that we're going to get stuck in. But who knows? We'll see. That's kind of what we're expecting and preparing for. On the daily, you can see that we bounced off of this simple 50 moving average yesterday right here. There's got to be some demand in here because that's where we bounced from. We took out all these levels up here, but they've been tested plenty of times. And so the only thing that we need to watch for is if we're going to stay within this high and low of this candle, which means this is an inside day, and on an inside day, typically you have a chop where you'll trade up, you'll trade down, you'll trade up, you'll trade down, and not really make any definitive move in one direction. But it's still early. It's not even 7 o'clock, so we still have some time to see how this plays out. Okay, we're getting a little pushback down. Yes, good consumer sentiment coming out in about 4 minutes. We had personal income, personal spending, core price index, all earlier today, all in line with, I guess, what they estimate. excuse me, estimated. Ten-year bounced right above our level. Didn't hit 17 and a half on the daily. Got down to 18 and a half. Didn't get filled on here. We'll see if this will hold for the extended move up. Still think we're getting up to 130, but we have a little overhead supply still. Yeah, right in here on this 240, not on the daily. It's a nice big strong move out of this area down here. Couple of zones that we can potentially buy on the way down. It looks pretty good at 24 and a half. And then we get back all the way down to 122, 123. It's a ways down, but we got some zones down there, so. This one, it looks very similar to the one down below. Take a look, this is a much smaller level, which is okay. It just means that we don't have to risk as much to get in. Now the problem with these demand levels is they're so far on the curve, so far down in price. What does that mean for the market environment as a whole? To get down there, we're really going to have to sell off, which means the trend is basically going to have to change. So we have to be cautious when we take trades that are this low down on the curve, down in price relative to where we're at, because we have to pay attention to the actual trend, to the overall trend, the bigger picture. If we're able to get down to those prices, these much lower ones, chances are that we're going to be in a downtrend rather than this uptrend. So that's one thing to keep in mind when you're identifying levels down below. If you expect the move to continue to the upside, then these higher levels have to hold and have to bring us up higher. Otherwise, there could be a trend change underway. There's that. Let's go back to the ES. ES has pulled back. Is the NQ pulling back? Yes, it is. This is a little retest. out of this area. Wouldn't necessarily take this. What did we get up to? We got up almost up into this area. Right in there. 5,700. Probably take this a little higher. That up in there like that, right around, wrap it around 5,700. That looks pretty good. See if we get a break out of this little low right here. We have to pay attention to this area. This area. If these two get taken out, we could have a trend change. Two pivot lows. Could be heading back down towards the lows from yesterday if that's the case. Let's wait and see. Nasdaq's pulling back a little bit, trying to stay above that level. Dow's the strong one today. Dow's up 65 still, and let's see if that can take us up. Got a couple levels of supply up there. Let's take a look on a bigger time frame what that looks like. No, nothing great. We'd want to probably take something higher up here on the curve. Couple areas on the YM to watch. Let's see, right in here. Small, but need to pay attention to it. And then this level down in here is 21,250. See if we can hold these two lows right here. Alright, back down into these lows. Dow's doing that as well. Let's take a look at the NASDAQ. It's hitting that area right now. Let's get back down to the 15, see what that looks like. Excuse me. Not seen any follow through yet. keep showing some weakness. We keep pushing down. Let's see here. This is going to have to hold if we want this to continue up. Let's see, bigger picture. And we are pulling back right into these levels. Can you hear me now? How's that? A little better for you? Let's see. Let me know if that works better for you guys. Okay, we're getting a bounce out of this area on the ES. Alright. Let's see here. Just gotta be patient. There's not much going on. You could take this trade. Could have taken this trade. This morning we're just identifying trades. We're not really trying to get into anything at the moment. Nothing is really setting up that we like. This is the closest thing you got to any real demand. We're testing that area right now, so we'll see if we can hold that. So when I have your stop below the 16 area, your first target is going to be up in here between 24 and 25. Second target I would set, up at the 30 to 32 area is your second target, and then third target above that would be up at the 40 area. So we got this area as first target if you're long right now. Second target is up in here, and then your third target would be all the way back up to the highs of yesterday, or where we broke down yesterday. So a couple of entry points to get in, or get out rather. If it fits your trade plan, then these are some potential ideas. Alright, now we're getting that further move up out of this area in the ES. Showing some strength. We need to pop back up above 22, 23, and we'll make our way back up to this area. Okay, that works. Thanks, Philip. Just let us know if it's too low, and I'll try to adjust the gain and the other settings on the mic. Alright, there we go. Now we're seeing a nice pop up. Depending on where you got in, it's a couple points. One of our strategies that we teach is to get 2 to 3 points a day in the ES and make a living out of it. If you can do, 2 contracts, 2 points a day, you're looking at $200 over 20 periods, 20 trading days per month. You're looking at, not every day is going to be winning. You're not going to have trades every single day, but on average, you're looking at close to $3,000 a month in income just from 2 points a day on the S&Ps. So that's one of our little strategies that we teach as a way to generate consistent income on a daily basis. We're getting a pop back up in the NQ. See if it can hold. There's the Dow. Dow has popped up out of this little basing section, basing area right here. It came all the way down to the bottom line, but that's okay. You need to have your stop down below. Recommend at least 3 ticks below this line for your stop loss. So if you're in at 97, your stop needs to be below 83 at the very least. Sometimes these levels don't hold exactly how they're set up, and you can get a push through and get wicked out, and then you can see the market move in your anticipated direction. And we don't like when that happens, and so we've seen it enough where you have to adjust your stop based on what product you're trading. You got to know your products, know how they move, what the wiggle room is necessary to stay in trades. That really helps you stop getting stopped out, and that's one of the biggest problems with trading, especially on a shorter term time frame, whether it's stocks or futures, is getting stopped out. Using your stops are great, but if they're too tight or if you're not getting in at the right areas, you can experience stop outs quite often. Hopefully you're keeping them small. You don't want to risk more than, I say, 3% of your entire account per trade. Realistically, you'd probably want to be closer to 1%, 1.5%, especially if you're newer. Again, it just depends on your trade plan, your trading style, what products you're actually trading, um, et cetera, et cetera. We have slightly different rules when it comes to options trading in terms of stops and amount risk. Depends on the actual trade. Probabilities are a little different in the options market, so these are all things that we teach in our room, in our live trading room, in our mentorship program, to really understand the different markets and the different products and how to take advantage of them consistently. Yep, I'll go ahead and increase the volume. How's that? Is that better? Let me know. Okay, this ES is popped up nicely out of this little overnight area that we identified, and it's moving back up into the opening range. Um, the low on this opening range was 24.52, that first 15-minute candle, and the opening price was 25.50. And so we need to be cognizant of this area as our first target to get out of the longs. If you have a multiple contract setup, you take one off here and let the second one run. Depending on your style, you move your stop to break even or you leave it alone. We typically don't touch our stops unless it's on bigger time frame swing trades where we have already met our first target and well on our way to second target. We'll sometimes move up the stop loss to break even to secure that risk-free trade. A lot of the times our trades, since we use multiple contracts quite often, a lot of our trade scenarios that we get into can become risk-free pretty quickly. And what does that mean? That means if you have two contracts, and let's say you got long at 19 right here, you take one and you're risking, let's say 19 down to 16, so you're risking 3 points. Your first target is 3 points away. So you take off one contract at 3 points, and now you have a break-even trade. That remaining contract you have, the risk on that is still 3 points, but you've just taken 3 points profit out of the market. So you basically have a risk-free trade or a break-even trade early on after getting filled. And so those are the type of scenarios that we like to have in play. And then you don't necessarily need to touch your stops because if you know and are comfortable with the fact that you've already taken some profit, the market may move further in your direction, which is great. You have no control over that. But you're also protected to the downside, and you're giving the market wiggle room. A lot of times it'll take off out of an area and come back down, retest, and then really explode out of there. So it just depends on your trading style. If you can afford having multiple contracts, then a lot of the times it's going to be less risky to use that strategy, especially if you get good at finding areas of where to get in. Um, that makes all the difference in the world. Here we go. We see the NASDAQ popping up a little bit. YM's trying to hold, continue its move up. So we had 2 out of the 3 majors that we look at, the indices, hold their little overnight low areas. NQ just came a little bit deeper into its overnight trading area, but now it's bounced already 25 points. NQ moves. Wow. So let's see here. We got SPX and ES staying above the previous close. We just touched some of the trading from yesterday late session on the SPX, bounced out of that area, and so we're moving up. Can't really pick a direction. We got wicks to the upside, wicks to the downside. The path of least resistance at this point looks like it's up. Don't have that much overhead supply unless you get up here or you go down to smaller time frames. We have this to lean on in terms of demand. This whole zone in here, it's not the cleanest area, but there are some buyers. We saw price move away from here, so if we can hold this area, we may be able to move up further. If crude just sitting there not doing much. Alright, sorry about that, Philip. I don't know what's going on. Cat, how about that? Let's try that. Right up next to it. Right up next to the mic. Maybe that's a little bit better. I just don't want you guys to hear me breathing. So again, keep in mind, previous day candle. Right now we're at an inside day, so we're going to see some chop most likely, unless we get a move, an extended move to in one direction or the other. On these days, you got to be careful with your trading. It's got to be the perfect setup. Don't force anything. Take a look back at the VIX. The VIX is probably on its way down. It's usually what it does. Yeah, we got the NASDAQ popping up. ES popping up. VIX futures 12 and a quarter. VIX cash 11.13 on its way down. YM is holding nicely up above these levels. Bonds just sitting there. This 125 and a half. Quick look at equities. Let's see. Apple, we keep looking at Apple. We got a couple positions on. We have some short puts. We were able to roll those down yesterday after that nice move down in Apple. Now we have the 135 puts instead of the 140s. Got a nice $2.10 credit for those. We still have the 147 calls, so if we get a break out of this area, you're going to see a nice run back up to 154. What else do we got going on? Let's see. Take a look at the Russell. We don't trade the Russell a lot, but next week it's actually coming back to the CME, so we're going to do a whole thing on the Russell coming back to the CME. We're going to start trading it. We're going to start taking a look at it more often. Look at this. This IWM is just crazy. We have basically been in a range from 132 to 142 for going back to December of last year. For basically 6 months, we've been stuck in this sideways range on the small caps. You had that event of Mr. Trump getting elected to finally break out to the upside, and now that that catalyst is over, you're seeing the market trend sideways, not really picking a direction. So we're going to have to wait and see what type of confirmation to either side that we're going to get. At this point, it looks like we're ready to break up to the upside, but the other markets aren't necessarily suggesting that. So it's something to keep an eye on. Let's take a look at interest rates real quick. We got a nice pop up from this 50 MA starting yesterday, a couple days ago. Now we're up about a point and a half in terms of interest rates in the 10-year. We're at almost 2.3 now in terms of rates, and that has pushed bonds back down, as you can see. Sorry about that. Okay, let's see here. What were we looking at? We're looking at SPX now on the 8-minute and the 15-minute and all these time frames. This is a setup or a screen that we like to use to get multiple time frame analysis in one shot. We have everything from the weekly down to the 8-minute. I go down to a 5-minute. Something about an 8-minute chart that just works. There's no special formula or secret to it. You really can trade on any time frame you want. You can trade on tick charts, share charts, whatever you want. Whatever sets up with your trade plan and your style, your personality. This is just an easier way for us to look at the market intraday, broken down for us all at once. Let's go back over to oil. Oil is not doing a damn thing. So let's see if we can. Let's go down to a smaller time frame. A lot of the time we'll take trades on crude off of tick charts. Tick charts are a great way to really get a good picture of where price action is, where the imbalance is in supply and demand. And so you can see that on a much smaller time frame, take advantage of it. Again, our goal for oil, we're trying to get 15 ticks out of oil each day. 15 ticks is not a lot on oil when this thing can move a couple bucks in a day, a couple $1,000s a day in value. So 15 ticks is actually a really good goal, and the tick chart is a really good tool to accomplish that goal because you're looking at smaller time frames and can see price levels, and don't have to wait necessarily for the bigger time frame levels to come into play. We have a slight gap down here that looks interesting for a buy, a demand zone, but we need to pull out a little bit further to see where we're at. Again, our open and close, we want to be aware of that. 44.89. That's right in there. That's right there. Okay. So that's where our open is. And you can see it's a gap up. So we would put quite a bit of weight on this level in terms of it working and wanting to take the trade. So there's the open, and then let's just duplicate this line and let's get the previous close up there. This is just data and information that we use to make decisions about buying and selling. That's all this is. It's no magic formula, no special way to trade. We're just taking pieces of information from price and aligning that with certain pictures on a chart. When you break it down like that, it doesn't seem so complicated. Okay, so we're going to take this entire level right here. 93 to 80, that's 13 ticks of risk per contract. And we had a nice move away from this area, so if we got back down to here, this has been taken out already, so we can probably get a move back up to at least 30, maybe 40 in terms of targets. So that's well above our 15 tick target. 15 ticks from, let's say we got filled at 93 would be 45.08. So we're looking at this low right here is T1. And then T2 could be back up at this level, 30 mark. T3, a little higher. So let's get that set up. T1, T2, and then we have our T3 up here. So those are potential, this is a potential trade setup that we like. Put your stop down here, at least 3 ticks out. Put it below that little candle at 76. Let's change the color. So that's red, that's our stop. And this is our trade setup on the tick chart for crude. Let's put an alert in here just so we can make sure that we pay attention to it. Okay, so we'll leave that as is. Take a look at the ES. It's holding on as best it can. but we may be making a move lower now. We didn't get that follow through that we wanted to see to the upside. The other markets, the Dow's right back into that zone. Take a look at the NQ. It's starting to move its way back down a little bit. Let's take a look at the VIX. Keep that on. Okay. Let's take a look at this USD JPY cash currency, cash forex pair. This is really a good gauge of risk and sentiment in the equity markets. The yen futures is also pretty closely correlated with the 10-year Treasury note, so you can use different markets to help look for confluence, and that only acts as a way to enhance the odds in our favor, so to speak. So this is one of the markets that we look at to kind of see what the fear level is, the gauge of participants around the world, and we're basically flat for the day. It doesn't show like we're falling off a cliff like yesterday, where we peaked out close to 113 and then fell back a full point. And you saw the equity markets pull back hard too, VIX spike up. So this is just another piece of information that we use to help make decisions. Okay, let's see. So we had a 4-point run up from this line, basically, this proximal line. Like I said, one of our strategies that we teach and that we employ is getting 2 to 3 points on the S&Ps every day. And you don't need to go for the 20-point, 30-point home run plays every single trade. You can make a nice living getting a couple points a day, multiple contracts, and doing it consistently. That's the whole thing about trading. Everybody's so fascinated with the next best indicator or the next best this or the whatever it may be. People don't focus on finding something that works consistently and doing it over and over and over. Honestly, most professional traders will say a lot of the time that they get bored because you're either waiting to get into a trade or you're waiting during a trade, and you do it so many times it's become so mechanical. It's the same thing over and over, and it's not about the money. Then it's what you do, and that's what we teach our members in the mentorship program and our live trading room. It's part of our core strategy, how to take advantage of these markets on a daily basis and generate that income. So we're pulling back a little bit. S&P's back down to that level. Dow's back down to that level. I would assume the NQ is back down into that level as well. On the lows, we're basically flat for the day. So bigger picture, inside day. So we're not going to expect much to happen, but we're going to be prepared if it does. So let's go on the 15-minute. Let's find some other areas. Nothing really below here, to be honest. In terms of demand, you'd have to go on a smaller time frame. This is not a clean area. You may be able to find something in this area. We go left to find some more price action, if we can ever get there. Yep. So this is what the market bounced off of yesterday. You can even take this down to the lowest level if I can get TradeStation to cooperate. So we basically held on these lows and this little pattern down in here. Below that, what was the low? 2400. Let's just call it that. You have this congestion in here. Nothing great. Nothing great. You had a little speed bump right here, and that got taken out by this candle. And we still are not finding anything. I mean, you could probably take this trade again. So barely got into it. But we got to keep in mind bigger picture. If we're seeing some really downside movement, some good downside movement, you know, these demand zones down much lower, we got to be cautious with, because the trend may have changed at that point, and when we're in a downtrend, demand zones get blown through, supply zones are holding. So that's the dynamic that we have to be aware of while we're trading real time, is what's happening with the market environment, the internals that may be changing right in front of us. And if we're not tuned in or keyed into the market and what it's doing, you may miss that opportunity, and you may be taking trades that you shouldn't be taking, getting stopped out, and not following your rules. So these are all things that we teach in our programs online, in the room. We go over this stuff every single day. We're all about trading. We live trading, and we've been doing it for quite some time. And so we're trying to help people eliminate a lot of the same mistakes that we've made over the years, and really find that path to consistency. Crude, we're going to wait for it to come back down into our level. So we have that identified. Bonds, nothing great. I mean, if we didn't have this big demand zone down here on the daily, this would be a setup for us. It's a weekday. We have the open in the previous close, right, smack dab in a supply zone. So this is a trade that we would normally take and look for. See right in here. It's a small zone, but if we got a retest up into there, you could probably take it down here because that's the open. These levels tend to hold, at least initially, and that's where the multiple contracts come into play, because you could take some off, take some risk off, take some profit, and then set yourself up for a risk-free trade. We had gold turn away from the open, as you can see. Exactly what I'm talking about. These levels of previous closes, opens, they usually will hold the first time they're tested, and it provides an opportunity if you can get it lined up with an area that we look for in terms of the pattern and the candles. Then it becomes a very powerful setup that we like to use quite often. 145 down to 143, that's $200 per contract in gold. You know, if you can make $200 a day, I'm sure 99% of the people out there would take that any day. To be able to work from home, work from your own office, work from a laptop, your phone, whatever it is, whatever you feel comfortable working from, and generate that $200, $300 a day. in short-term income, you'd take that all day long. ES bouncing out of that area once again. We got a few minutes before 8 o'clock. We're going to take a couple minute break, grab some tea, and I will be back in a few minutes, and we'll see where the markets are at that point. I'm going to leave this crude chart up. Hopefully we can see some movement to the downside and we can get filled and get into this market. We'll be right back. Alright guys, we're back. Let's see here. Yep, S&P's holding on to that overnight zone that we identified, and we're popping back up. Hopefully you guys were able to join in, get in on that. The Dow did not get back down to the second level yet. It's holding, and looks like the Nasdaq's rallying back up. Let's see here. Yep, out of this area, down in here. Now we're moving back up towards the highs. Let's go to a 15-minute. Crude's making its way back up to the highs. We really got a mixed bag right now. No clear direction of what the markets want to do. Again, when we have these type of days, you just got to be patient and wait. So far, we've had two opportunities. One on the Dow, one on the ES, and you could have taken a shot on the NQ if you were able to have that lower level as your entry point. Let's bring up the 30-year. We have some levels on the 30-year that we've been taking a look at. It's actually in one right now at US equals 114XN. If you guys are wondering what the symbols mean, when you see the month after the product that you're trading, and this is the front month contract specific that you're looking at, and this is what you need to trade off of real time. And if you see something like this, the at US equals, then we're looking at unadjusted charts that include all of the rollovers for all of the expirations, looking as far back as you can, and so it gets the truest picture, truest representation of where prices have been. When you have rollover, prices change, levels look a little different, they're slightly different, and so using these XN charts allows us to see where price actually was in time. And so if you look at the front month contract, this month it'll look similar, but anything prior to that, if you're looking back at zones or areas that you need to go back months on, you should use these charts to give you a better representation of where price actually was. So we go into that and explain that in a lot more detail. If you guys have any questions or concerns, you can always just shoot us an email, and we'd be happy to go over that with you a little more. So we're basically in this level in here, right in here, holding above this. We got some stuff lower that we would like to participate in. Not too much lower. We have these levels in here, the 152 area, a little bit lower, the 151.5 maybe. But we need some movement to the downside to get down there. So we're just going to leave that for now. On the daily, we have a nice area down here at the 151 area, 151.19 to 150.28 as a possible daily demand zone. And then below that, you're looking at 148 area on the 30-year. Let's go back to the 10-year. So this is the front month specific contract that we use to trade off of directly, and then the continuous contracts we look at on bigger time frames. is having the hardest time get above this breakdown right in here between 23 and 24. Not seeing that follow through yet to the upside. Stalling out a bit. Let's see here. YM. Yeah, it's just stair stepping its way down a little bit. Couldn't get up to 350, and there's a short up here that we possibly take. Yep, looks like we're making our way back down. What is that going to do for our option positions? Let's take a look. Okay. Let's make this a little bit smaller. So right here we have a couple short verticals that we have on in SPX. This one's expiring today. We had the 2330 puts. You can see that this is part of our core strategy that we implement every week. When we get days like we had yesterday, where we have that expansion and volatility, we really want to sell as much premium as possible. Those type of events don't last very long. The VIX being up 50% doesn't last. As you can see yesterday, it got slammed back down. Before the end of the day, we were back under 12. So what we do is we have set a criteria. There's some other metrics that we look at, and we put on these trades as a way to generate this passive income on a consistent basis. Our core strategy that we teach our members is to generate 1 to 2% per month on your account. And if you can do math, that is a nice return on year end. We're taking a lot less risk than if you were just trading stocks or futures outright. We're very far away from the market, so we're trying to be conservative as possible and generate that passive income. No, Lamar. We have one of our guests or one of our members joining us, and he was making a joke. We have some friends that don't really understand the effects of trading and what percentage returns do for your portfolio and generating consistent returns. Let's make this clear. 2% a month does not equal 2% per year in terms of a return. If you're getting $1,000 per month on a $50,000 account, you made $12,000 for the year. 12,000 into 50,000 is 25%. It's a little higher than that if you take compounding into effect and all that good stuff, but 1 to 2% a month is all you need, honestly. And if you can do that, you're going to be beating money managers, hedge fund managers, Wall Street managers, whatever you want to say, mutual fund managers all day long. They wish they can average even what the S&P does on a yearly basis, and that's right around between 7 and 8%. And they're dying to make that. Well, we're doing that without blinking. So it's a great strategy to have on top of the other types of trading that you may be doing. We complement our options strategy and a few other strategies in the options market with our futures strategy, and it's worked out nicely, and that's what we teach our members. We teach our members how to use the two types of trading to generate this passive income, to generate this consistent income using your own money. Your own money is the best employee. This is the best business to be in. You have very little overhead. You don't have to answer to anybody. It really comes down to you and you alone, which makes this the ultimate form of entrepreneurship, is trading in the markets and really taking a hold of your own destiny and making a change and bettering yourself, bettering your family, whatever it is. Increasing the account size, paying off debt, whatever your goals are. I can think of no better opportunity than learning how to trade in the markets, understand what you need to do to generate consistent income, and then to just stick to the plan and be disciplined. With that being said, let's get back into the markets. Let's see here. We're not getting a down move in oil yet, unless we're peeking out here. A little triple top kind of thing, head and shoulders maybe. If we can get a break under here, get back down to this area down here, 44.90, we're going to get long and take it back up. Oops. Again, big picture, we expect prices to get up a little higher before ultimately making another swing low down to the $35 handle range, $30 range in oil. So we're just going to wait and see if this can get back up here. There are a couple opportunities on a smaller time frame that we like in terms of shorts, but we'll get into that as we get closer to that. For now, we have some nice green candles indicating an uptrend, intermediate uptrend for now. We do have some supply above us, but on a shorter term time frame, in the context of the uptrend, we're trying to get long, and that makes that trade valid. But we're just not getting any follow through to the downside, so we're not getting the opportunity to get back in. But that's why you prepare, you set it up, and then you wait. We got gold just sitting here, not doing much. Bonds doing the same thing. Markets now doing the same thing. That's what we warned about to start the day. If we have an inside day after that big move down yesterday, you could potentially see just a bunch of chop going on into the quarter. end of the month. We may see something going into the close, a little more action than this, but we had some opportunities, a couple points here and there, 2 or 3 points on the ES, depending on your position size. You could have you'd be done. A lot of our members, and ourselves included, on choppy days like this, we'll take our 2 or 3 points and we'll scram, we'll get out. There's no reason to force trades or sit in front of the screen if there's no opportunities presenting themselves. Especially, if you had a nice week and nice trades, or if you got some options expiring today, there's no reason to press, no reason to force it. Just wait for the opportunities, wait for the setups to occur, and then follow your rules, stay disciplined, and get into the trades. We're seeing if we can pop up on oil. It's hitting right on the top of this candle. Okay, there we go. Alright, yep. Let's take a look at this. See, we're not getting to close above this area. We're just poking up right into it. And so what we were thinking is that this could potentially be a small triple top or head and shoulders formation that'll bring us back down into this area where we would want to get long. These are our targets. I guess we have to move them over since the market's moving. T1, T2, T3, and our entry and stop are down below. If you guys want to take a look at anything, if you have any trade ideas or questions, concerns, comments, just let us know and I'll be happy to go over it. I'll switch over and take a look at anything that you guys are looking at. We have earnings starting next week, really the bulk of it in the next couple weeks. And so we're going to be going over a ton of earnings plays coming up in the equity markets, how that's going to set up going forward. I know we have the holiday shortened week next week, but some stuff's going to start coming out, and then the week after that is really when it starts getting going. So we're going to talk about those. That'll be in our trade room and our mentorship program, really going into detail about how to take advantage of earnings consistently. Banks, mixed bag today. Tech stocks, mixed. Again, we just really have no general clear direction in the market for now. As I say that, the S&P is pulling back a little bit. We got the rig count for oil comes out today. That's the only news event that we have left. Let's see. Still got about an hour and a half before that rig count comes out for oil. So may see it just trade sideways up here for a little bit. We'll keep an eye on it. We have our alerts set up. Third attempt into this area. We don't take anything past a second attempt, so looks like it wants to break down further, but we're going to have to wait and see. Not much going on. Let's take a look at some of the currencies. Let's look at the dollar. Always want to have an idea where the dollar's at. That's going to dictate, you know, where most of these markets are going to end up going. And we have on the weekly broken below the election rally, and now we are below that level in the dollar, which means to the flip side, currencies are all up at their highs, and right now we're basically in a pretty big demand zone in terms of time frame and implications of what it means going forward. If we hold this, you're going to see the major currencies sell off. You're going to see this rally up, and you're going to see commodities and gold react to the dollar getting bid back up. So we're just going to have to wait and see. But if you're going to take an opportunity to get long in the dollar, this is the one that we've been waiting for. This is the area that you'd want to get in, right around this 95. Can't necessarily trade this cash dollar index, but you can trade the futures, you can trade ETFs, heck, you can even trade the euro future contract, which is basically an inverse of this dollar index. Dollar index is comprised of all these currencies from around the globe, and the highest weighting is going to be the euro, and so you can basically flip the chart around and look at the euro and trade that. When dollar's coming into demand zone, euro, chances are it's coming into supply zone, so you know, you can look for that correlation, wait for it to happen, and then you could take advantage of it. If you drill down to a smaller time frame, we have basically put in a rounding pattern. You usually see these at either the top of moves or at the bottom of moves, and what you could do is wait for this to form, it breaks out, you get that first pullback, and then you would join the trend upward at an area like this, 95.60. So this can give you the opportunity to get into this longer term trend on a smaller time frame. Keeping in mind that we are in daily demand, we're looking for an area or a base to join into this trend reversal potential, and if you can find a setup where you get a nice move out, it consolidates and move out again, and get that on the first retest, this is an area that you'd want to take to join that trend if it is going to reverse from here on that bigger picture time frame. We have a question. Let's see here. We have options expiring today that is close to the money. Should I close it, let it expire, or roll? Well, that's a good question. It depends on a few different factors. Number one, what product is it? It's the Qs. Let's take a look. You have the 137s. Okay. Well, considering that we came, well, deep into this zone and have bounced, a couple things that you could have done. You could roll. You should have rolled. You could have rolled the contracts yesterday on this big down move. Volatility was up. That's the type of scenario, market conditions that you want to have when you are going to roll. And simultaneously, it was hitting a demand zone, a pretty big one as well. So that's one scenario, is rolling the position when you have those market conditions being met. To give yourself hopefully a credit, give yourself more wiggle room to the downside. But let's say you didn't roll, you didn't really know what to do, what you wanted to do now after seeing this move up. I would want to go down on a smaller time frame and really see if there's a chance that price can get back down to the 137 area. I mean, you're pretty close to it. Another thing you want to take into account is how much are you up? If you're up, I suspect you are. You know, leaving 20 cents on the table, 10 cents on the table to get out of a position and not worry about the gamma risk is one option for you. So if you have some profits on it, there's nothing wrong with taking profits. I'd just get out. You can get out and resell something at a lower price. So you're basically rolling. So there's a couple different scenarios that you can really go through when you have options expiring on a day where it's pretty close to the money. Depends on your trade plan, the account size, number of contracts you have. If you have multiple contracts, take a few off. You can let some run. Before we got down to this area, you could have sold some calls against that position to help protect yourself from the downside move further. So it really just depends on a few different factors. But there's options for you. There are options for your options. You don't have to get stuck in something. You don't have to take a loss necessarily. Let's take a look at a smaller time frame. All right, Philip. Thanks a lot for joining us. Appreciate you coming in and taking a look at what we're doing. Yeah, just send us an email with any questions, concerns you may have, and we'll get back to you as soon as we can. Let's take a look a little bit further, down further. The 137 is right here. Oof. Yeah, this is a tough one. This is a tough call. If you were up on the trade at any point today, most likely you'd want to just take it off. You don't want to get stuck with that gamma risk. Now, the other thing that we didn't talk about, which could be a possibility for you as well, is if you don't mind owning the stock at this level. If you think that longer term we're going to get a pop back up, you know, to a higher level, let's say 140, there's a nice gap right here, 142 up in here, ultimately back up to the 144 area. Then if you get put the stock, you're going to incur some costs, the assignment fee, exercise fee, whatever you want to call it, commission, depending on who your broker is. But yeah, you really want to pay attention and make sure you know what is going on in terms of the market. Yeah, if you don't mind owning the stock, you can hang on to it. If you have multiple contracts, take some off. If you're comfortable with, you know, 100 shares, 200 shares, whatever your account value dictates, then you know, that's another option for you. Okay, so hopefully that answers your questions, Lamar. I don't know if you where you're at really with the position right now, but we did go through a few options for you. Man, we had this identified yesterday, and I'm just looking at it now. We did not take advantage of that. This big old move up from yesterday, right into this supply zone, right below a gap. A couple things you could have done here. You could have sold some slightly out of the money puts. Could have bought some at the money or in the money puts. And you would have had a nice day yesterday from this level. See, we didn't put an alert up here, so we didn't see it. But that's okay. Let's see what else we got. Take a look at Tesla. Tesla's looks like it's making its way down. Maybe changing the trend. We're going to have to wait and see. This looks like a topping pattern. A couple attempts to get up there, stay up there, and it hasn't. It's pushed down. We'll see. Let's take a look at the SPYs for you guys that traded SPYs. Okay, let's take a look at the daily. Yep. Smack dab right in the middle of this big old channel that we have going on right here. It would take quite the sell-off for us to get back down to this trend line. That would have to happen pretty soon for it to get down to these really low levels, but I suspect we're going to trade maybe sideways, slightly down, grind down a little bit, bump up into this channel, probably right around the 234 area, and see if we can hold that channel, this bottom half of this channel, and bounce back up to the upside. 250 is up here, that'd be 2500 on SPX. We'll see, we're just, we're right in the middle of the zone right now. Peaked out in early February, March, came back down. We've still made new highs, but we haven't had that exaggerated move like we did before. And so it may be rolling over into this lower half of this channel. So just something to be aware of and keep an eye on. On the weekly, not much to say about that. We've come back into these highs and into this little congestion area and have bounced so far. But we cannot get closes above the 244 area, and this is on the weekly, so for now, we're going to look for dips to buy until the trend appears to change. Our RSI is overbought. It's pulled back slightly, but the market hasn't really followed through with that that momentum that we typically see with that. So, you know, these are just things that we have to watch for. We are in the summer trading hours, so it's usually slower, much more range bound, and a different market environment that we have to pay attention to. Okay, let's see here. Yep, Well, 3 tests and we're still above. We are holding on to these levels for dear life, it looks like. NASDAQ doing the same thing, just hanging on. Dow, oh, we had to move down into the Dow, into this second area that we had identified lower on that lower time frame. Let me take a look and see what that looks like. But it did get in there. Yes, it did. Okay. So this is kind of the same area that we were looking at for the S&P. This overnight low that finally broke out, and we're getting this first retest into it. And you can see that it's moving higher away from that level now. There it is. Looks better on the 30. We can even bring this down to that base right there. You're risking about, call it 20 points because we always want to have our stop outside this lower line. So about 20 points. That's $100 a contract on the YM. You know, you can do 2 or 3 lot, risk 200 or 300 bucks. Have your first target at this high, this big round number, 21,300. Second target would be up at these highs, about 35 points higher. Above that, you can play that last contract, if you have one, all the way back up to these highs at 21.4. But this is an area that we would look at for a short up in here, so this has to be a target. It could be your third target, it could be your second target, but it has to be a target. Let's take a look at some other markets while we have this workspace up. We're going to look at copper. I think a lot of these things have rolled over. Let me take a look at... Okay. Sorry about that, guys. Don't know what's going on. Okay, let's get back into the charts. Let's take a look and see if these things actually did roll over completely. What are we looking at? Copper, HG, yeah, it's on the September contract now. It's the U. We're going to have to update all of these. HGU 17, oopsie, fat fingered. Okay, platinum, silver, they got to be on the U contracts too. Platinum's on the B at PLV17. All of this information, all of this data, how to find contracts, the most front month, you know, the months that it actually trades. Go to the CME website, cmegroup.com, and they have all of this information listed out there for you. We're working on getting that to our site, having all the detailed information about the contracts and different products we trade. We're working on that to have that available for everybody on our site. So that's coming soon, but in the meantime, you can always visit the CME Group site and check out times that these products are traded, you know, the different months that they trade in, and get some other neat statistics that'll help, will only help in terms of your trading. You want to know the products that you trade. You want to be educated in terms of their hours, their volume, you know, the wiggle room that they need, tick values, etc. Okay, let's see, gold's still in the Q, silver's on the U, and let's see what these softs are on. These softs are on. Why can't I see that? Wait, they're on all different contracts. Let's see here. Let's just take a look at the markets. We can play with that later. This is a daily. We've had a nice run up from this 255 area. We were looking at trying to get long back down into that area down there, and never materialized. And so missed that opportunity, but that's okay. Daily real quick again. So we're up into these wicks in here. Let's just put a line on the chart so we can go smaller and see what we got. If it wants to load. Okay, I'm on TradeStation. What you doing here? Come on now. Well, this is just silly. See if nat gas will pull up. Good on natural gas. We got the Q contract. Yes, we do. We're good. Okay. So we are filling a gap right now. Looks like we gapped up, made some new highs, and now we're pulling back to the origin of that gap. Let's look on a daily to start. Oh yeah. We could not break above this congestion area. I know we had talked about that yesterday as a possible breakout trade, but you're seeing more selling pressure. And now we're getting a retest of this area. What may end up happening is you make a new low, which it did. Not a closing low, but it made a new low, and then bounced up out of that area with a gap. And so we're getting a pullback into that area, and this may be the opportunity to get in to see this move back up to the upside. Usually out of an area we've seen in our observations and our record keeping, when you have a nice move up out of a demand area or a violated demand area, you usually are going to get a retest back down to that origin of that move as an opportunity to get on, hop on the train, so to speak, to ride this back up. It likes to pop, retest, and then make its initial move. So let's see, on the daily we can go down into a smaller time frame. We're looking at 295 down to 29 basically. So it's a big zone on nat gas, so we'd have to refine it and go down a little bit lower and see where we're at. Okay, we're popping up in the ES and the other markets. Okay, so let's see here. Not the cleanest of levels down here. I suspect this was a report that came out. Yeah, last Thursday's report, and that provided some movement in the markets. We broke out above these little highs right here and these wicks, but could not get above this. And now we're fading back down, and so we want to find a place to join this possible reversal and uptrend if it's going to happen. You have an interesting little area right here with a move up. Let's see. Let's take that. Gonna include some of those wicks just to make sure we got that covered. Okay. So this is just our process for going through and finding opportunities. We look at our watch list, we look at the different markets. We start with price, and then we go up and left to find supply zones, and down and left to find demand zones. And so we have this opportunity potentially setting up for a long in nat gas down here to join this trend back up. Nothing in terms of supply that would scare you off from this. Realistically, the next best supply zone, it looks like it would be up at this 3/4 area, and then you have a gap up in here, so we want to pay attention to that. Natural gas likes to gap quite a bit, and so this would be a potential play down here. It's not looking too bad. Let's look at something else. Yeah, it's not the greatest. As you go smaller, could probably even refine it down to this little zone down here, 292. A lot of the times though, it will stop at the origin of the gap, so you can take a trade here. Once the gap fills, you can, see a bounce out of that area. But the lower level I like a little bit better. This 2.923 has never been tested, and we've just climbed up higher out of there. So a couple areas to look at. If you trade with multiple contracts, which we advocate if you have the account size and the skills to do it, you can put a contract on down here and then have a second order down here with your stop ultimately down below this whole zone. As a way to get into this. If you don't like this higher zone, you can just wait for this zone, wait for price to come in and take the trade like you would. But there are gaps, and this is a gap fill. And with a gap fill, sometimes it hits it and reverses. So depending on your trade style, your trade plan, your account size, your rules, that'll dictate the type of entry you want to take to possibly get into this opportunity. Okay, so that's the 2-hour chart. That's a 60-minute chart. Yeah, on the 60-minute it looks a little bit better in terms of this gap fill down in this area. I'll keep an eye on it. Let's put an alert. Okay, what else? Did copper want to load for us or what? Yeah, it did. Okay. So 2.7 was the high. Broke above that wick, but we couldn't break above this little double top right here. And then you have this standalone by itself, this pop up and fade of a move. Nice extended move down, way out of this zone. Is that a retest of anything? Yeah, that's just a retest of this area in here. Not liking much on natural gas in terms of supply zones. There's a little area right here, but it looks like it's already been tested. You can see this wick got up in here and already potentially used all the buy orders up. Let's go to a higher time frame and see if there's anything different. Yeah, if we take a look at this higher time frame, you're going to see that that 60-minute zone of that rally up, stall out, and drop is on a wick. We don't typically like to trade off of pivots itself. You'd have to go down to that smaller time frame and take the trade off of that level. Okay, here is that supply zone that we were actually just looking at on the 60-minute, and this looks a little bit better on this 240. This is not bad up in here in terms of supply. Have a nice move down out of here and has not been back since. We're basing right below this zone, so when that happens, we typically ignore this area, this lower zone, and wait for the higher level to come into play. So that's exactly what we're going to do here. We're going to move this up, We're going to make sure that this has an alert on there for us, so it can bug the hell out of us to make sure we're paying attention. And we're going to wait for copper to get up a little bit higher. Let's go back to the equities. There we go. So T1 is finally hit on this long ES trade this morning that we identified. Came in there and hit it 3 times. Really hit it more than that. But you know, given the inside day, it doesn't surprise us anymore. We just don't take these trades. The second or third or fourth test. The first test is what you'd want to take. First time it gets into the zone, then you'd want to take it. You just have to have your stop down below and be patient. No reason to move your stops if you're not getting stopped out. No reason to move your targets if they're not getting hit. Once you have your trade set up, it's best to just leave it alone and let it work for you. And don't mess with it, because then you're going to start letting emotions get involved, and you're going to second guess yourself. You're going to see the dollar signs, whatever demons or issues you're dealing with. You're gonna project that into your trading, and it's just going to make for a very difficult trading session. So it's best to identify your levels objectively, set up your bracket orders, and let them work. That's how we found the most success in our trading, is really just sticking to those simple core principles. Alright guys, I don't know if we have any other questions. It doesn't look like we do at this time. We have just come up into the 9 o'clock hour Pacific Standard Time. We are in the slow period for the markets now. T1 was just hit. If you guys are able to take some profits on that, I would do so now. Leave your stops where they're at, unless your trading plan dictates that you need to move them up, then do that. But other than that, we're going to wait and see if we can get above these highs from this morning and then move further up to our second target. Let's take a look back at the YM. Excuse me, the YM has moved up out of this area. Yep, there we go. We're up about 40 points out of this zone. That's $200 a contract. With a further move up above 21,350, that would be second target. First target be up in here in this first high that we made this morning on this candle in here. If you go into a smaller time frame, we identified the level on the 30-minute, so that's where you'd want to find your targets, is on the 30-minute. Yep, it just hit the first target, 315. Second target, you can do 350 for a big round number with some congestion up in here. Smaller time frame, this is probably smaller supply zones, but ultimate target would want to be up here above this 21.4. This is the area that we're going to look to take short if we can get back up here on the Dow. Whether it's today or Monday, we want to see a nice clean, strong arrival up into this area and have our sell stop, buy stop up here. At least 3 ticks above the high. That's what we like to do of this zone. What are we at? 49, that's 44. Yeah, you can even get away with doing it above 50 to really protect yourself above this wick. Go up to 54. If your trade plan allows you to do that, if your account size and risk allows you to do that, you can move the stop above the entire area, not just the particular zone that we're looking at, to really protect yourself from getting stopped out. But we like this area for a short. You have that rounding pattern which usually signifies a change in trend, and we have that here with a nice strong drop away and no revisit. So the only thing that we don't necessarily like about this level is it is a retest off of this high right here. But the move is what we really focus on, and this is a nice strong move out of there with this type of structure that we're looking at. And this isn't the only market that we saw this on. You see this in the ES, you saw this on the NQ. Here it is. This rounding out pattern. This rounding out pattern. Right here. Right here. You see this. You get a sell-off. It rallies back up to it, and then it completes the actual move down that it wanted to do in the first place. So, same thinking. We have this rounding pattern. Big drop. Price is going to trade sideways, rally back up into this area, and we expect maybe a further move down. We might not get all the way back up into this area. If you go on a smaller time frame, there are some supply zones in here on the way up. This is a 60-minute, so depending on your style, you may not go lower than this, but it doesn't hurt to take a peek behind the window and go a little bit lower to see what's there. If we can get the data to work. There we go. Big rounding pattern, rally back up into it. Big rounding pattern, I'm going to rally back up into it. We have the levels identified where we'd want to go short. And there's a couple of them in here. There's this nice level right in here from 40 to 44. Nice big drop out of here. Let's go down one more. Let's go to the 15. I already have that on the other chart, but we're going to stick to this chart since we're already on it. Okay. So let's see here. Overnight high, hit up into this area right here. That was this morning. That first 15 extended up into this, hit the bottom of this candle, turned away. We liked it a little bit higher in terms of a short, probably closer to this 32 area. And then we have that higher level above right here. That looks pretty sweet. This 2440 area up in here. It's like a nice area to short. So a couple of zones above that may stall us out before we get back up to this zone. Taking a look at that other rounding pattern. We had that big old rounding top, and it didn't quite make it all the way back up to the top, but we identified a nice area where price dropped out of, which was right here, and the trade worked out nicely. We scroll this way. Come on, I'll just move it. There we go. That met our entry right there at 47, and you had that nice pullback down to 34, and a further move, obviously, down to 2400 basically. So this pattern, this structure produced about a 50-point move to the downside. So can we expect the same thing from this type of pattern? Why not? History repeats itself. You see the same things play out over and over in charts in the markets, so there's no reason to expect that it wouldn't. But you never know. There's always uncertainty. So you prepare the best of your ability, follow your rules, set up your trades, and then let the market do what it's going to do. Let's go back to the 60 and get out of this. ES is poking its head up. Take these guys off here. Yeah, these areas are nice up here, so we just have to wait and see. We're getting to move back up. It's a nice trade for you guys that took it. It's working out. Dow trade working out nicely as well. And I think the NQ is up too. Let's take a look. Yeah, the NQ is breaking out to the upside. We're at 70 right now. We're going to see if we can get out of this little congestion pattern. We like it better, and we use it as an enhancer to our setups when all the indices are hitting demand or supply at the same time. It usually bodes well for the trades that we're taking, and you have that today with the YM, the NQ, all coming into some overnight levels and then holding that and bouncing up. And we use that really as a way to confirm our entries and levels that we find. Just another arrow in the quiver, if you will, of how to analyze and trade these markets. We go over all this stuff in our mentorship program, in our live trading room. You don't get to see it really in terms of the trade alerts. Trade alerts are more for traders who are already in the markets, trading these markets, that want some ideas, looking for ideas, and that's a great way to you know, have somebody else, you know, working with you, working for you, of getting ideas out to you, so you can go ahead and you know, get your setups in and take some trades. But behind all that, the understanding, the process, the routine, all of that, we go into great detail, and we teach our members that in our two other programs that we have, the live trading room and definitely our mentorship program, where we get into advanced strategies. We get into, you know, microscopic details in terms of why this, why that, why this level, why that level. You know, how many contracts here? What are you looking for there? Really, we you know, share our complete strategy with our members. We want you guys to consistently generate this income just like we do. So we saw, okay, now we have some further clarification on what this oil market wants to do. We popped up above this area, and we'll see if we can hold it. Now we have a new level of demand really formed. It's not the greatest, and it's a little high up in terms of where we're at relative um, to the rest of the trading for the day, but there's potential to join this further to the upside right at this 45.40 area. Let's get out of this thing. And let's see. This is a tick chart, so we're not getting a whole picture of where we're at. We're going to have to look at the time chart to see exactly where we're at. Let's go to a bigger picture. Okay. Oopsies. I didn't mean to move that. There we go. Okay. So we cleared this high. We did that last night. Now we got a ton of free space to the upside in these candles. I like to call these speed candles. You just get a big drop or a big rally up, and we want to look for the origin of these moves, not in between. Price has a funny way of just going straight through these levels without much resistance, and so we'd want to go to a smaller time frame to see why price is turning or stalling out right here. It may just be a pause and then further momentum to the upside, or there could be something on a smaller time frame, but we want to go down and drill down and look at it. Yeah, still nothing on this 120. Let's go down to a 60. Nothing. Still nothing. Let's go down to a 15. Skip a few of those. Okay. Take a look. Nothing. It's not hitting any prior lows. It's not hitting prior wicks. So we still have plenty of room to go in terms of oil to the upside. Let's take a look at a smaller time frame. Then this actually makes this area not so bad to get in. 10 minute, 10 minute. Let's scroll back. Still nothing. Maybe we need to use our tick chart to find a level. We have a little wick over wick here. What we like to do with that, that usually represents a small level. When you have price stall out and then drop, continue its drop, which means there was more sellers than buyers right here, or a lack of buyers here. And so if we can drill down and maybe see what's in this, there may be a tell in terms of what it is. Let's go swipe left. Oops. Already up 1.25% on oil today. Oh man, there it is. Okay, so this is where we stopped today. We're at the high of 64, and it has stopped in the middle of nowhere. Yeah, even on a 5-minute, this isn't really a valid level for us. There's not much until you get up in here, and this is just all wiki, and this is all retesting off of levels to the left, further left. So if we're going to find something, this 70 has already been tested. Not looking good in terms of a supply zone on crude. And we're going up more, and this is the area that we are looking at. On a bigger picture, this is the area that we're looking at. This 48 area. You have this huge drop out of here. And so we would want to take this, but on a higher time frame. We want to look at this at a higher time frame. This is a big zone. It's about 30 points, 30 ticks. So let's get back up to the 60-minute. We have the indices moving up. Yep. Okay. What were we just looking at? Crude. Okay. Okay. Yeah, nothing, yada, yada, yada. There it is. This is the level that we are looking at on the 48 area on crude. You probably want to take it up here then. This whole zone looks like a nice level of demand. I mean supply, excuse me. And this is 14, and 32 is about 50 cents risk. 500 bucks a contract. Oil is not for the novices to trade. It's $10 a tick, and you can see this thing move a couple bucks in a day, which is $2,000 per contract. So this thing moves. It is volatile most of the time. You can take opportunities out of this market on a daily basis. especially on those smaller time frames when you don't need to go for bigger levels. You can, like I said, our goals, we're looking for 15 ticks in oil. You do that with a 10 lot, you're in business. It's $1,500. We have a little sample chart that we send out to our members showing the power of just breaking this down and creating small goals for yourself each day, using two contracts in crude, getting 15 ticks. It's $300 a day. You're not going to have winning days every day, but if you can average 1, 2, 3, 4, 5, about 15 days out of those 20 days where you can get consistently profitable at about $300, you're looking at over $50,000 a year, getting 15 ticks in oil. Doesn't sound like a lot, but if it's something that you can do consistently over and over, that's what you're trying to do ultimately, isn't it? You're trying to make money in the markets, and how do you do that? Well, you find something that you have an edge in, that you can build a system around, rules around, and consistently do it day in and day out, no matter the market conditions, to produce the results that you want. And that's what we try to emphasize and what we try to teach in our different classes that we have, our live trading room and our mentorship. So, long story short, not much in terms of oil. There is room to the upside to go. I'm not even going to have this on here. So what we would want to do is go down to a smaller time frame and see if there's an opportunity for us to join the trend. I don't know if we're going to get a pullback down into our previous close and open area. I would like that a little bit better, but we're subject to the market and what it wants to do, so we're just going to wait and see and be patient. The one thing about this level that we don't like is the move away from it was only about 20 ticks. And so in terms of a real imbalance in supply and demand, I'm not sure how many more buy orders are left over from this. It may have just been a situation where people are getting stopped out and taken out, and now it's fading back down. So we're more comfortable with this lower level. More aggressive traders can get in and hop in here, since there is no real overhead supply above us for a little bit. So this may be a potential opportunity. It's only 5 ticks, $50. Keep your stop down below here. 3 ticks. Looking at 8 ticks maybe in risk. It's $80. Couple contracts, 160, $200 risk for an upside potential of well, we didn't really find anything until you got up to closer to 80, so the risk to reward is pretty high there. It's still high when you take a look at this opportunity as well, but again, it depends on your trade plan and your trade style. Alright guys, we got a few minutes left before we get out of here. If there's any other questions, concerns, comments, ask now. Get it out before we take off. I'll be happy to go over any market, go over any trade setup you have, ideas. Let's see, let's take a look. Take one final last look at markets. So we had the trade set up on the ES this morning at 19 down to 16.75 as the zone to get in. First target was back at this origin of the drop on the 15-minute candle, the first 15 minutes of the trading day. That was our first target, and it just got hit up at 24. Second target back up closer to 30. Target above that is at the short area that we'd want to take, up at the 40 area. So just stick to your rules, stick to your plan. Don't deviate. Don't get emotional. Let the markets work for you. And if you guys have any questions, concerns, shoot us emails. More than happy to answer any questions you may have about the markets, about our strategy, about options, futures, doesn't matter. Either one, we're here to help. If you guys want more information, check out our website at simplyderivative.com. We have videos, we have blog posts with tons of information. We're working on some neat tools for our members behind the scenes. And yeah, if you guys wanna join in with us while we trade, visit the site. A couple ways to do that. You can get into the trade room, or you can join our monthly mentorship program, and we'll see you guys on the other side. Other than that, have a great weekend. Enjoy your holiday, and thanks for stopping by. Take care.